1%. Josh, yes, the context is we're what, 1.3% off record highs, but there is a little bit of a tapering is coming feel to the market today. If you look at what's dragging us lower, staples, real estate, utilities, some of the groups that benefit from lower yields. What say you as to the softness we've seen in the recent sessions?
Yeah, we're in one of those periods of time, Sarah, where the average stock is having a much worse time than what the indices would suggest, especially when you look at the NASDAQ composite, not the NASDAQ 100, but just like the entirety of the NASDAQ with all of those IPOs and SPACs and things you've never heard of. There are some massive drawdowns in like thousands of names right now. And we've been here before. It doesn't have to be the end of the world. But there really is a lack of leadership here, which would argue for a pullback. After those FOMC minutes were released, you can really get a sense of just like how bereft of narrative this market is right now. It's a little bit like me walking out of a Buffalo Wild Wings on game day, just disheveled, sloppy, no real sense of like, what do we do now? So the higher odds of a pullback when you have a situation like this. Even when you look at leadership, you look at like Lowe's, nobody knows anything. This is Exhibit Z. Here's a stock that got smashed to multi-month lows after Home Depot reported today up 11%. Best stock in the S&P. Nobody knows what to do. Second best performer is a M&A candidate, CBOE, which the CME is already denying. And then you've got some big popular stocks looking terrible. Amazon, more lows. Looks bad. I own it. It's not cooperating with my retirement plan. PayPal's rolling over. Also looks terrible. And then, like, if you want a bright spot, let me give you a stock that's in a severe uptrend. U.S. Steel. Having a big day today, trending higher. The chart looks like it goes up every single day for weeks and weeks. Unfortunately, that's a sub-$8 billion market cap. Does nobody any good. So that's where we are. And I don't really have a strong conclusion about what it means, but it doesn't look great.
Let me ask you about some mega caps. What's a more important thing right now, Josh? The fact that Amazon hasn't been doing all that well lately, or the fact that Apple has been holding up? In fact, it's been near new highs. Which would you focus on more if you're trying to figure out where the next major market move is going to be?
Well, over on my second favorite show, the Halftime Report, Judge, Joe Terranova, I think, gave us the best explanation, which is that there is a push toward quality, which explains the Apple, Microsoft highs while, for example, the ARK stocks are breaking down. And I think that, look, I don't like to ascribe these anthropomorphic, behavioral traits to the stock market, but I do think that there is that movement under the surface, people just looking at their positions, even the quants, and just saying what's working well right now, size and large size and quality. Let's bias ourselves in that direction. And of course, Apple and Microsoft are the most emblematic of that idea. So I do think Joe is right about that, and I think you could find examples of that in every sector in the S&P.
Yeah, I should touch the fact, too, the Dow's at the lows of the day now, fresh, 328, and looks like we're falling as I'm speaking. I can't keep up because now it's down about, I don't know, what was that, 330? We changed the, there it is, 333. So we do have a little bit of a sell-off as the close is getting closer. On the back of the Fed minutes, some other uncertainty within the market, 35,009. We're barely holding on to the 35,000 level.